Hello and welcome. It is that of the second day of August 2018. My name is Derek and this is the Crypto Day Morning on the Money Charts channel. Like always, all bets, all trades, and of the like within your own risk. For myself, risk-reward management is always job number one. Within Civic against Bitcoin, I don't know if it's even worth really bringing these charts up too much because to me, there is no indication of seeing a move like we seen occur just a few hours ago, as this thing was moving around at about 2100 and change Satoshi against Bitcoin, and then it just goes for better than a 3x gain. And well now it's only up about 30+%, and only, which is true because that's a small cry compared to where it was. I've already talked about strategies and how to play for these moves, so there's no real need to talk further about that. And even different things like the gem coins, if you will, or what I consider the diamond in the rough. Like JSNP4 has talked about like a theta coin being, okay, this is the next big popular coin. I've already went through mine. It's been doing very well. And I unfortunately can't show this on here because it's not traded on any of the major 3 exchanges. And let's take a look at Bitcoin to finish it, which is mainly what I'm going to be showing, like I have been, as the main details, because I find that the most important market amongst the bunch. And within BTC, price action in at about 75.25, as it is having its 4th consecutive down day in a row. At least thus far it is the case. Yesterday's close came in at around 7,600. It's consolidating back to where it came from. The 18 average on the daily has flattened out. I've been more concerned about this 3-day time frame because to me this is the time frame I am going to use as the indicator for this thing turning over, as I've talked about the reversals of strategies on so many fronts, where you're in a downtrend and then you first flatten the band out for the first stage. You establish a level of resistance on the second, which means the 18 should newly be rising, and it is. Stage 3, you come back to such, and that's the case now, as it is now back to the 18 average of highs. And then getting above that point after that would be what I'd be looking for that of a bull market or a reversal of trend. So within this situation, I'm looking at the 18 average of lows and at about 6,900 almost as its level. And of course, it can pierce below that. The neckline for the inverted head and shoulders pattern on Bitcoin worked out to be about that of 68. So if it's looking to go to a place of which it came from that would still bring in that of a higher low, then that would most certainly be the area that I'd be looking for next as a level of resistance. Since it has made this move down towards this area, this is now period number 5 since this red candle of pause moments, meaning after a decent up or down move, it really doesn't do much but go sideways and with low volatility, which is the case in here. That's another way of putting it, as markets are no longer as overextended. Because I look at key legs, higher key legs, lower situations, and amongst such, there's a spot where it broke a key level of resistance. So there's your new leg lower in here. And breaking down below this, I'd be looking for, well, of course, a new leg lower. And within, of course, the buy and sell orders, that's just one of the easiest things to look for. As you have a spot where if you're buying on the lows or the dips, there's a spot where there's a dip in here. And then one leg lower would be a dip. And if that's too short term for you, well, then that's what the longer term charts like the 3-day and so on would be good for as well. And we'll move this on to the weekly chart, which within its 18 has been in a small decline since its great rate of ascent, for it flattened out on the early parts or into all of February, into March. and has been declining at a slow rate because it has been unable to make lower lows. It's making lower highs, which is the reason why it's in a declining situation. And this is the first time amongst the weekly that it has spent any time above the 18 average of highs since the market was in its bull market phase. I don't know if it's going to come down and test that 3,000 level I've talked a lot about in the past, as that would represent that of a 38.2% down correction from the lows of around 150, the 2015 lows, and the highs of around 20,000. A 23.6% move is that of about 6,000 and change, which was an obvious nice hit. And then again, below that 38.2% is 3,000. Fibonacci retracements using the formula that I use works very well historically, and I'll keep on using it until I notice that it doesn't. And that formula, and I'll cross my I's, dot the T's, is high divided by low for any key levels. And then you put that to the root of the key fib numbers, which to me is 0.236, 0.382, 0.618, and 0.764. They are actually Fibonacci numbers. And then you multiply it by the low number again. Fibonacci upside and downside can work within these markets as well. And for them, the Fibonacci levels would be 1.618 for the exponent there. And I'm looking for an up move that goes down. So 20,000 divided by 6,000, which is a little over 3, to the exponent of 1.618. Multiply that of its low, and then you'd get your number. And that would be over 42,000. As far as Fibonacci downside, I'd be looking for an uptrend that goes lower. So in a situation like this in here, we had a low of 6,000 that had a high of about 11,008. So I'd have 11,008 divided by that. Basically, we'll say 2. 2 to the power of negative 0.618. Multiply the low again would give a downside target. That number would be noticeably over 3,000. But that's just another way of measuring targets more than anything. And there's multiple ways of doing it. And one of the key things of note is when you have a key level of resistance support that's been tested for quite some time, then you use the if situation. If it gets taken out, what's the probability? Well, the probability is it's going to have a decent leg lower, which means 5,200 isn't that decent of a leg lower. It would be a noticeable move and really a failed breakdown if that's where it were to bottom, if it was to do such a thing. And that's one of the things I realized too. And then you're in a big bull market long term like this has been. And as I've stated, within this 3-day and weekly, there is nothing here that has regained this bullish chart. But when it does get regained to that of a bullish move, having moves like we've seen last year where it goes from 1,000 to 20,000 in less than a year, or another way of saying over a 20x gain in less than a year, is normal kind of market behaviors, especially in a situation that is quote unquote a free market, or at least where no artificially traded coins are amongst the into play. Because the whole thing about what people talk about gold and silver and the GLD, SLV, or any way of trading them on the paper, or I like to call it the digital market, is you can't take possession of such after you buy it. But every single time you buy Bitcoin, you can take possession of it. You can move the Bitcoin to a hardware wallet, to wherever you like. You got access to those Bitcoins to move and hold however you wish. Now, that's all you can do with these cryptocurrencies, as all they are is a unit of exchange. And to me, it does very well in passing its requirements to be that of a form of money, and that of all the things. Now, it being tangible, when I hold my hardware wallet like I do, and I can put it in a safe like I can my silver bars and coins, it is just as tangible in that level. And as far as having any type of case use, well, if you think Bitcoin isn't that tangible, then neither would Microsoft Office or Windows, because it's a working software, working operating system. And this is a working Bitcoin, that is, and a lot of the other cryptocurrencies, a working unit of exchange. Thank you for tuning into today's video and have yourself a great day. Bye-bye.